Hey, what's going on, everybody? You're tuning in to howtoplaystock.com. Today is Friday. Hope you're having a good morning. It's 9:02 a.m. And in today's video, I wanted to talk about the Dow Jones and where we stand with that, how much lower we could probably go, um, things of that nature. And then there's a article from Zero Hedge that talks about the deficit right now, and they touch briefly on the government shutdown that we had yesterday or last night, and what all this means moving forward with the national deficit. So getting started here, guys, the Dow Jones right now is up 333 points. Now we're still early in the morning here, so this could you know change drastically throughout the day, and we could end up negative again. I don't think we'll probably have another 1,000 point drop today. Um, what I actually see right now is if you look at my cursor up here, we had a peak and then a lower trough and a lower peak, and now we're getting somewhat of a higher trough than what we did, or an equilibrium. So I think what you might see is a bounce up, back up to this first support level of around like 24,700. Now I don't know that that'll play out today, but by Monday I think you could see it back up. We'll take a little bounce back up here, and then I think we're going to be coming back down again. And if we break that second support line coming back down next week, which is around 24,100-ish, give or take, 25 points or so. Once we break that support, the next level of support that I see it falling to is about 23,254 roughly. So we still have a ways to fall here on the Dow Jones, and I don't think this big slide down, or this correction that we've had so far, I don't think that it's over just quite yet. And let me explain why, because I think a little of it has to do with just fear in the markets overall, things being overvalued, but there's some underlying stuff that's brewing um, out there in Washington that I think has an effect on it as well. And I think some of that might be leading to a lot of this fear. So I found an article here from Zero Hedge. It's called Moody's Threatens U.S. Downgrade Due to Soaring Debt, Fiscal Deterioration. Now, I've talked about the debt in numerous videos before. If you haven't subscribed to the channel, go ahead and do so. You can go back and look at some of my previous videos that I've done on national debt. But right now, for every dollar that's created, there's about $4 or $5 that have to be created in debt to go along with that. Okay, so if you know that, then you know that, being that we're in a debt model system, financially, there's always got to be debt that's created in order to keep the whole system going. Okay, but back in 2011, Standard & Poor's shocked the world and the Obama administration when it dared to downgrade the U.S. from its vaunted AAA rating, something that had never been done before, and led to the resignation of S&P CEO and a dramatic crackdown on the rating agency led by Tim Geithner. All right, so nearly 7 years later now, with the U.S. on the verge of another government shutdown and debt ceiling breach, okay, with the agreement reached only after midnight hour, literally. This time it is Warren Buffett's own rating agency, Moody's, which on Friday morning warned Trump that he too should prepare for a downgrade from the one rater that kept quiet in 2011. The reason, Trump and the Republicans and Democrats both, their aggressive fiscal policies, which will sink the U.S. even deeper into debt and solvency, while widening the budget deficit, resulting in meaningful fiscal deterioration. In short, basically what this means, guys, is a U.S. downgrade due to Trumponomics is inevitable. And incidentally, with today's 2-year debt ceiling extension, it means that once total U.S. debt resets at end of day, unburdened by the debt ceiling, it will be at or just shy of 21 trillion. Now, what did I say in a previous video that I shot? Actually, it may not have been the previous video, but a couple videos ago, I was saying that the debt has to continue. Trump has to add debt just to keep this whole thing going, and I think that's what you're seeing here. So I've had people come to me and say, well, the debt really doesn't matter because it's just digital ones and zeros. They can print money out of thin air. All they have to do is just add zeros to a screen and we're okay, and we can just continue doing that. Okay, well you know that's a good valid point, and that's partially correct. The problem is though, again, you've got interest rates which are thrown into this whole mix, and those interest rates are either raised or lowered. And when you start messing with the interest rates, you start messing with inflation, meaning how much things cost and how much purchasing power you have in your back pocket. Now, Alan Greenspan has also talked about this in hearings with Congress before, where he said we can print up as much money as we want, we can take the stock market as high as we want. What we can't control, though, is the purchasing power in the back pocket of every American here in the U.S. That's one thing they cannot control. So I think what they're going to have to do ultimately is deleverage a lot of the debt and basically forgive it. They're saying here the stable credit profile of the United States, AAA stable, is likely to face downward pressure in the long term due to meaningful fiscal deterioration amid increasing levels of national debt and a widening federal budget deficit. However, the U.S. economy is very strong, wealthy, dynamic, and well diversified, and its role in the global financial system is unmatched. So this isn't happening just here. That's another thing I want to point out. Um, pay attention to the markets. So when they open up in the morning and we have a 1,000 point drop off, watch what happens when the Asian markets open, and the Australian market. All the countries around the world will follow suit. So, like just the other day, Nikkei, they were down like 5.6% on the Nikkei index. So you'll see that as well. So this is not happening just here. It's happening everywhere. And to bring it back to what they're saying here, uh, basically they're saying that we're stable, right? And our financial system is unmatched. Well, that's somewhat true. I would say, and I would look at it as we are the best house in a shitty neighborhood. Okay, so it's not that we're unmatched. I mean, that's probably more of an opinion. I think it's just we're the best house in a shitty neighborhood. These factors, though, help compensate for the impending fiscal weakness, Moody's Investors Service says in a new report. Moody's has already indicated that rising entitlement costs and rising interest rates will cause the U.S. fiscal position to further erode over the next decade. Again, it's going back to what I was saying about what Alan Greenspan has said in regards to being able to control the purchasing power in the back pocket of every American. So, they can raise interest rates or lower them. That affects inflation. Maybe not short term, but more long term. And when you get inflation, it affects the purchasing power. I'll leave a link in the description where you can finish reading this article. I just wanted to point that out, though. I thought it was pretty interesting. And let's go back to the charts real quick because there's a few other stocks that I was looking at. There's a couple live trades that I'm in right now. Grow is a good stock that, well, I don't know if I'd call it a good stock. It's just an asset that has got a lot of exposure to the cryptocurrency market. So if you're somebody who doesn't want to buy Bitcoin directly or Litecoin, and you want to stay in the stock market and have a little exposure to cryptos, Grow is a good one to look at. I actually got in on this trade earlier this week. It was on Tuesday. I bought in roughly around like $3.15. And right now I'm just waiting. It's kind of starting to go in a sideways trend here. So we're getting a little bit of consolidation. I'm waiting for this thing to pop back up. And my first target price would be roughly around 529 or so, where the support level is. So I'm looking for this thing to start changing direction here soon. We'll go to where is it? Aurora. Now Aurora, at the current moment, it's going through a little bit of consolidation as well. We had a couple nice days which bounced off the weekly support, brought us back up to almost $9.41. Actually, it was about $9.21 to be exact. And then we shot up a third day and broke $9.65. We broke that support level there at $9.41, and then we started coming back down here and we're consolidating a little bit. I would suspect because the earning reports that are coming out, they're saying right now that they had a quarter two for 2018 compared to quarter two of 2017. They were looking at about 200% growth, which is phenomenal. Like you just don't see that, and I think here over the next week, due to those earnings reports coming out, with that kind of growth, I think we're going to see the price continue to rise and take a bounce here as we consolidate a little bit more, and then I think we'll shoot back up. Because if you look, we've got a lower trough, a higher peak, and then a higher trough. So I think it's changing direction already as far as the trend, and we're going to continue bouncing up here. So that's Aurora. Those are the only two trades I have going right now in the stock market. I'm going to continue watching those carefully. And like I said, the Dow Jones, I would suspect we're going to take a bounce there on that as well and go up here into next week at about 24,700 at the highest, and then we'll turn around and we'll start falling back down again. One thing to keep in mind when you get the overall markets like the S&P 500 index and the Dow Jones correcting like this, it's nothing to panic about. Actually, I embrace it. I welcome it because it gives you more fair value in the overall markets as far as price on a lot of these assets. So if you're a smart investor, what the smart investors are doing right now is they're simply just sitting on the side of they're sitting on the sidelines with cash, and they're waiting to come in and buy up more of their assets at a more fair value price. And so that's what I'm doing as well. It's something to consider if you're somebody who's looking to get into investing, especially right now. But other than that, that's all I have for today. You're tuning in to howtoplaystock.com. If you like what you're hearing, go ahead and hit the like button. You can subscribe to the channel as well. I'll be shooting more videos here as the weeks progress and the months progress on all sorts of different assets as well as the stock market here. And other than that, you guys have a great weekend. And remember, income is the outcome, okay? I will talk to you guys next week.